everyone. Today, Monday, June 15th. Let's look back at last Friday's market close and preview the big picture for this week. Gold finally managed to steady its nerves near the end of last week, with spot gold closing at $4,218.68 per ounce, ticking up 0.18% on the day. However, looking at the entire week, it was still down over 2.5%. On the flip side, silver put up quite a tough fight, closing at $68.0 to $7 and bucking the trend to gains 0.32% over the week. To be honest, the only reason gold and silver managed to escape with their lives from oversold territory this time was thanks to the sudden warm breeze blowing from the US-Iran peace agreement rumors, even though gold ironcladly held onto the $4,000 psychological milestone, showing that long-term institutional buyers are buying the dips. Its previous breaks below the 50-day and 200-day moving averages did some serious technical damage. Plus, as long as oil prices don't pull back, inflationary pressures are here to stay, meaning gold will likely have to repeatedly test and build its bottom in the short term. But this week is where the real clash of the titans begins. The global central bank super week is officially here. Aside from the central banks of Japan, the UK, Australia, and Switzerland, the entire market has its eyes glued to the Fed. This meeting marks the debut apparent interest rate decision for the newly appointed Fed chair, Kevin Warsh. Although everyone expects interest rates to hold steady this time around, the recent hot CPI and PPI data have already pushed the market's bets for an October rate hike up to 50%. Industry gurus have emphasized that what really matters this time is Warsh's tone during the press conference. If he opens his mouth and turns into a super hawkish eagle, gold could easily face a fresh round of heavy dumping. Conversely, if he acts like a dove, gold prices are highly expected to launch a powerful technical rebound in the long run. If the high interest rate environment squeezes too hard, the economy will eventually snap, which ultimately favors gold anyway. For now, $4,000 remains the absolute do or die line for the bulls. This content is for reference only and does not constitute investment advice. Trade at your own risk. Remember to subscribe, like, and share. Thanks for watching.